ticker symbol VIRI touches down into our support zone, but in doing so, there could be something created here that may actually influence the upside sooner than later. Let's go ahead and go over that now. What is up, you guys? Thank you so much for stopping by. Once again, this is ARCa coming at you with a VIRI technicals, raw price action, and statistical threat of analysis on this Hump Day Wednesday. Before we get started, please make sure to subscribe to the channel, like the video, and share the video with a friend so that you and them could consider joining our trading community in Discord called ARCa Bulls. With that said, let's dive right into the charts. Okay, you guys, so we are looking at ticker symbol VIRI on the daily chart here, and this is essentially the total range of support that we were looking at just yesterday, right? Anywhere between the area of about 154, 155 to about that 141 level at the bottom side, right? So I want to talk to you about the immediate short-term time frame, but I also want to remind whoever is viewing this as a new viewer that we are actually keeping our eyes out for these two moving averages here, okay? So this represents the SMA 50 or the 50-day simple moving average, and this is the 200-day simple moving average, okay? So together, when the shorter term time frame period closes above the longer period, that is called a golden cross, okay? So that is a very bullish statement from the ticker if it does get that cross, okay? So you can see here that it's been quite a while since they've crossed, right? It's been literally since October 2022, and now we're finally getting critically close to that, and there could be a very nice upside move when that happens, okay? Historically speaking, of course, this is you know, a similar situation here, similar fundamental catalysts as well. We actually were getting that upside, right? I'm sorry, starting from here, right? We reclaimed the inside of the SMA 50, validated the support of the SMA 50, continued on to the upside. We crossed upside of the SMA 200, just like we're doing here. We succeeded the inside of the 50, validated the 50. We made our trek to the upside. Now we're crossing above the 200, and look at that. So right when we cross the 200 to the upside, we reach a level to where we start consolidating, just sideways trading, and that's literally what we've been doing here when we cross the upside. Okay, so what I want to point out is actually when we got the actual golden cross, which is right over here, price action actually led to a pretty significant upside, followed by a capitulation. And that capitulation is usually done because of the cross, right? We need to come back and validate that there is a critical support or that there is a viable support located. In this case, it was used, the 50 SMA was used. So I'm not saying that that's gonna happen, but I am saying that there's a high likelihood that that can also happen. So in other words, we get that SMA 50 above the SMA 200, which could be around Friday the 16th, maybe Tuesday the 20th of June. And then as soon as we get that cross, the price action can lead to the upside. And as soon as we get that cross, a couple days later, we can come back and test the 50 as a viable area of support before continuing on to the upside, which could be located maybe around 150 to around that 140 level, the SMA 50 I'm talking about. Okay, so that's essentially what we're looking at, you guys. Remember that that's mostly speculation until we get the actual cross. We need to make sure that to keep an eye on things like this because they're important for the asset, right? But what I really wanted to talk to you about is actually the shorter time frame, because there is something very curious building and something that I know a lot of people like to see. Okay, so let's go ahead and move on to this chart right over here and show you this. So this is a symmetrical triangle formed in the 4-hour time frame, and this formation is considered to be a continuation formation, but it does have play for both sides of the spectrum, okay? So I need to be abundantly clear about that. All right? So the reason why I'm saying both ways is because it's a symmetrical triangle. Symmetrical triangles per the traditional trading rules, it does have a top side objective and a bottom side objective. How? Well, you take a trend line from the very top side of the triangle that all the way to the bottom side of the triangle. You apply it to the supposed area of breakout from both zones, right? So in this case, the favor actually leads more towards the bulls because it's being formed during an uptrend. If this formation were being built during a downtrend, then the favor would be more towards the bears, still with the bidirectional objective, but still in this case we are in an upside and the favor would technically land on the favor of the bulls. Okay, so what's very curious here is that we were talking about a target yesterday upon the succession of the SMA 50 over the 200. We were talking about a target located at the 1.618, located at $2.06, right? So the 2.618 is actually a golden mean. So meaning 2.618, the 618 Fibonacci ratio is a very important target, and the sentiment in the overall trading spectrum, whether literally anything, traditional risk on assets, crypto, bonds, anything. Usually the trade likes to take it to likes to take the trade or the price to the 618 targets, right? So now coming back here, the topside objective based around this formation here is leading us to about where? 209. So it's it's very curious to be just 3 cents away from that 618. So it's very, that's a good sign. All right, that's all I'm trying to say. Another thing is that we were speaking of the total support range located down here that we just spoke of, right? 141 being the very bottom side of that, right down here, and the top side being around that 155. So let's go back to that triangle and take a look at this. The SMA 50 on the 4-hour, look at where it's located. It's located right at 141. In the event where we get any type of wick to the downside, just like this here, right, and reclaim the inside, that's there for support just in case. The top side located from maybe this candle here or this one where we're kind of guessing the objective is located, the resistance is located right at about 160. So it's just about 6 cents away from that 155. So everything is kind of rhyming together geometrically, psychologically, and mathematically. Okay, so I'm liking it. I'm liking it. It's still what I would consider a pretty healthy pullback. Okay, so now let's take a look at the 5-day iteration here. This is a VIRI on the 5-day where I've actually done a statistical backtest that the context is actually any time that volatility, which by the way is direction neutral, and this is the indicator BBWP representing volatility itself, anytime that volatility has expanded into these critical zones, which I consider to be within the 90 percentile, and started a contraction phase towards the downside, paired with stochastic momentum, which by the way gives us the bias for direction, paired with the stochastic momentum upside pivot, I have taken note of every iteration where that has happened historically on the 5-day chart, right? So out of 5 iterations, we have 5 correct, giving us an average upside accuracy of about 100%, with an average move of about 64.76% to the upside over the span of about 50 days. This is proof of work. I've also calculated the standard deviation. So the mean 64.76 has a standard deviation of 60.24. The reason why I'm mentioning this is not because of the lower bound of the first standard deviation. If you're familiar with statistics, it's the bell curve, right? And where 68% of the results land would be the 60.24 standard deviation. Now, the lower bound, which is the bottom side of the curve of the bell, and the upper bound, which is the upper side of the curve from the bell, you're looking at a 125% move to the upside that looks to be highly likely to hit. Okay, so that 125% upper bound of the first standard deviation lands right at the target of about 281. Okay, so now we do have a resistance here at 315, and I will tell you why. Okay, so 315 marks the top side of this candle right over here, which is the gap. Right before that gap, we have that target right at about 315, 316, and it also shows high confluence here. It shares a lot of confluence with the 4.618 at 311. Okay, so geometrically speaking, statistically speaking, psychologically speaking, fundamentally speaking, the asset is ready for making some pretty nice moves to the upside. Okay, so the resistance that we're facing here on the 5-day Gaussian channel is actually located right at about that 180 level, and we were also just speaking about that 180 target being some type of a resistance for us, right? Where is that resistance? I don't even know where the hell that is anymore, but it's okay. So I think it was actually nope. We'll get back to it if we find it yet again, you guys. But we do have the 2.272 located at 188, which could obviously, geometrically speaking, I was going to pair it with this, but I literally can't find the other one that we were talking about. Okay, but it's all right, you guys, not a problem. This is still actually, now let's look at the RSI to see what kind of price action we can face for the immediate short term, right? So the 30-minute immediate short term is finding some support from the SMA 14 represented by the pink line. The RSI signal is that cyan line, and you can see here that we are with an upside pivot. However, we have been chopping around this zone. Usually when we sit within this zone, this is the gravitational zone of the bear weakness percentile. We tend to get pulled into the upside here. Okay, so why it's not happening, I assume, is because there's still some things that we need to validate within our current position. Okay, you guys, so now the 4-hour time frame is showing a little bit of resistance here from the SMA 14. Okay, so this time frame and the 8-hour are essentially the ones that I'm paying closer attention to. Okay, the reason why is because they show relative resistance, meaning that we can pair that resistance alongside this psychological formation and see that the top side of this resistance level could actually land to about 163 temporarily, right? So we'll face that resistance. We can come right back down and test the SMA 10 represented by this green trend line, use it as a form of a support, and then try to break out of this triangle. Okay, so what I would like to also point out is that usually these triangles tend to realize their objective or realize their breakout at about 65 to 70% to the apex of the triangle. And I mean, we're right there now. And tomorrow, if we assume that we're going to break out within this area, then that's about 85 to 90% the asset. I'm sorry, to the apex of the triangle. It's not to say that it can't be done. I'm just saying that it's a little late. And the further we get into the apex, the more susceptible this can be for invalidation. But we're not there yet, right? So we just got to kind of play it by ear and see what happens here. But the good thing is that it's a very popular formation. Lots of people like to look at these symmetrical triangles, right? So anyway, going back to the RSI, now looking at the daily time frame, the 3-day time frame, and the 5-day time frame, they all kind of seem, or they're telling me that they're waiting for the influence from the shorter time frames to really show that upside or downside pivot, whatever the asset decides to do, right? So as soon as we get this true upside pivot here, a strong upside pivot on the 30-minute, it'll cascade, or it'll domino effect into the next time frames, meaning the 1 hour, 2 hour, and even into the 4 hour, thus creating a bullish cross above the SMA 14. Then the 4 hour and the bi-hourly would cascade into your 8 hour and 12 hour with an upside pivot as well, and so on. Right, so we're getting already a pretty nice hint from the 5-day time frame that it does have an upside pivot on both the RSI signal and the SMA 14. Okay, so if I were to look at immediate short-term time frame price action, you guys, I would definitely say that we could be facing a very, very short-term upside to about 159, potential retracement back to the area of, honestly, it's 153 to about that 151 level. Right, that there's a chop zone here, but in the event to where the price action does lead to a heavier downside, we have two supports. Okay, first, the one that we can find at 149, and the other one that we can find about 141, located at the SMA 50. Okay, you guys, that's just in case. I'm not saying that we're going down there. I'm just saying that we have to keep an eye on our supports and resistances, the relevant ones at least, considering the shorter time frame that we're looking at. Because when we are trading on shorter and shorter time frames, invalidations start to happen more and more often, right? So it's just something that we should take into account. All right, guys. Another thing that we should know is that first and foremost, I am not a financial advisor. Take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever. I need you to do your own due diligence and everything will be cool. But with that said, I wish you well, a very, very good night, and I will catch you at the bell mañana. Adios.